We are live.
A very good evening to all the members who have registered for the session. Myself, CA Rekha Umashi, Regional Council Member, SIRC. I take immense pleasure in inviting you all for this particular session on MCA updates and annual filing. So today, this is one area where I think almost all the CAs are a little bit scared to enter and give advices on because of the plethora of notification amendments and even the filings and penalties associated with it. So every day we can see the kind of filings, and even one filing, if we miss out, the kind of penalties that we are subjected to. So today we have a faculty, and I think I should say a little more about the faculty because he has been taking a lot of sessions on this particular topic, especially on the recent updates and filings related to MCA for a long time. So I take immense privilege in inviting Sean Jeff Christopher sir, and equally I'm very much privileged to invite ICAI Chairman P. Satishan sir to introduce our faculty for the day. Over to you, Satishan sir.
Thank you, Rekha ma'am. Good evening to all. I am very proud and happy to introduce my good friend, very long good friend, around 17 years of bonding with Sean Jeff Christopher. And he is also our Jomon sir's partner. So two ways we are so much bonded, through Jomon sir and directly with Sean. Anyway, I'm not wasting your time. Directly going to introduce my friend. He is a practicing chartered accountant and a partner, compliance at JVR Associates, chartered accountants for the last 16 years. And insolvency professional under Insolvency and Bankruptcy Code 2016. Presently handling IBC assignment as liquidator. Practicing at NCLT Kochi bench and NCLT Chennai. And as Rekha ma'am informed, he is a speaker and faculty in company law, insolvency code, FEMA, and international taxation. Secretary of Kerala Insolvency Professional Forum for 2022-23. Direct finance manager of in the year 2021 of District 121 of Toastmasters International. Past area director of Area G3 and past Edicom Kerala of District 92 of Toastmasters International. And presented papers on company law, international taxation, FEMA in CPE or study circle meeting conducted by ICAI branches across South India. Then completed certificate course on GST, international taxation, Forex and treasury management, concurrent audit of banks, and GST conducted by ICAI. With this small and very expanded way, I introduce my friend Sean Jeff Christopher to you, and today he is going to implement or present before you the MCA issues, filing issues, and filing forms. Sir, today I face a problem. Before starting your session, I am just starting a question. Today I face a problem stating that from 15/9/22, the small company definition has changed. As per the notification and circular, it is effective from 15/9/22. But when we try to file the forms, the form 7 is not available. 7A is available. That is with the new small company definition. So I have a doubt. Then I just inquire with the company secretary. Then he told me that, sir, no thing. Software is more fast than law. Now the software is bringing the first thing before the law introducing software come first. So software is making at 7A is the form for filing. So my question is, can be filed 7A with the, even then the definition is effective from 15/9/22. With this small question, anyway, you can answer at the end of the session, no problem, sir. With this small question, I once again introduce, I am very happy to introduce my friend, Sean Jeff Christopher, and the other members are very much eagerly waiting for your expert knowledge on the subject. Thank you so much.
Satishan sir, can I start?
Yes.
Respected SICASA Chairman of SIRC, Satishan sir, a close friend of mine. We did a course on international taxation in 2012, and we had a long bonding. And SIRC member Rega ma'am, young face of SIRC, the entire team of SIRC, senior members of the profession, and my dear friends. As CA Rega ma'am, as well as Adishan sir has rightly mentioned, MCA has took us through a roller coaster ride in form of various amendments, more than 4 amendments, notifications and circulars. And time and again, they remind that if you do not follow the same, you have to face the music. And at the same time, we should know that there are several initiatives taken by MCA to bring down the time taken to incorporate a company. So in this MCA scheme was launched way back in 2005. That's why during the COVID time too, we can easily incorporate a company. We will not go to ROC office. So a lot of measures they have taken, they are introducing, they're moving in a fast-paced manner. And Suggestion sir has rightly put the question here is that the definition of small companies amended only on 15th September. As Suggestion sir has rightly said, the answer, software is much faster than us. Because we are living in such a world that we have to catch up with the software. Even software is faster than the law, right? They are making the law. So that's the time. So we have to keep ourselves updated, remain change. We should be updated about the changes and move fast. Then only we can catch the bus. In this background, let me start my presentation. We are planning in such a manner that we will discuss on some of the important recent updates and goes to the annual filing. Though there is a question, some of the members asked me, Sean, why you are taking a session on annual filing at this point of time? So today is 15th. So existing companies, they have to complete the AGM by 30th September. And within 1 month, they have to file the AOC form. That is the annual accounts. But still they have time to file the annual return, 30th November. And if no one has filed AOC form, they have to pay additional fee of 100 per day. It will be 1,500. Let me share my screen first. And one small request, if you have any questions, either you can put in the question answer or you can put in the chat. Whatever mode convenient for you, we'll ensure that it will be answered in between. Whether my screen is visible?
Yes, sir. Yes, visible.
Right. Let's go through some statistics. So I just pulled out from the MCA website. As per the MCA website, in September, 13,542 companies are incorporated in our country. 13,542, out of which 3,604 coming to 29%. 27% is from southern Indian states. And the contribution, respective contribution of each state is Karnataka, 1,043 companies are incorporated. Telangana, rank 2, 918. Tamil Nadu, 901. Kerala, 471. And Andhra Pradesh, 271. So these are the companies incorporated. So there is no dearth for company formation. People are starting companies. We may feel that, okay, there are a lot of compliances. The compliance increasing day by day. Penalties are there. Still there is people are ready and willing to start a companies. And there lies the opportunity for the chartered accountants. And coming to LLPs, we know that when a person approaches us to start a company, we mentioned this are the fees, this are the compliance involved. So he will have a second thought. Then we have a second option. We can say the second card will play is that why don't you have an LLP? And look at the LLP statistics. In the month of September 2022, 2,975 LLPs are incorporated in our country. Out of which 745 are incorporated by the southern Indian states. You know the statistics, Karnataka rank 1, 201 LLPs formed. Telangana rank 2, 179 LLPs. Tamil Nadu 163, Kerala 161, and Andhra Pradesh 41. We know that the MCA, though the Act was introduced in the Parliament the year 2013, almost 9 years back, it came into existence only from 1st April 2014, that is 8 years. A lot of changes are happening. As we know, the old adage is change is inevitable. MCA is strictly following this principle that every time a change is required. So at least there are some amendments on a monthly basis we can see. So one of the important things is regarding the CSR committee. After the introduction of the Communist Act 2013 in the year 2014, the CSR provision, what it says that if a company complies, if company is falling under CSR criteria under section 135, that is, if the net worth of company is 5 crore rupees or more, turnover is 1,000 crore or more, and net profit is 5 crore or more during the immediately preceding financial year, then it shall constitute a CSR committee and comply with the CSR, contribute average profit, 2% of average profit to CSR. Here, when you look at the rules of CSR, Rule 3 of CSR, Rule 3, subclause 2, what it used to say is that every company shall cease to be a company covered under 135(1) for 3 consecutive financial years shall not be required to constitute a CSR committee and comply with the provisions. In brief, I would like to say is that, so what it says is that Rule 3, subclause 2 tries to say is that once a company is not complying, it's not falling under the CSR requirement for continuously for 3 years, then there is no requirement to constitute a CSR committee. And second, they do not comply with any of the provisions. So it is a walk-free provision. We are moving out of CSR. That means you don't have profits, you don't have net worth, like that criteria. But the point here is that what the MCA noted is that if those companies which are having some unspent balance in CSR account, then if this provision continue, what happens? They will walk scotch-free. So they should not walk scotch-free. They should comply with the provision. So this is a provision they have introduced. We can say again, license Raj once again. But again, nothing we cannot say because they are making this provision that in one way looking at the same, it's right. Okay, those companies which have unspent CSR balance. Challenge here is that this unspent is remaining from the last several years. This is a big question. So coming to the point, if the company is having unspent CSR balance and they are not they do not comply with the criteria because they don't have profits, net worth criteria, or turnover criteria, they are not satisfying. Normally, they do not comply with CSR, but now that is being removed. So what is the impact? Impact is that once a company is in CSR net, they must follow this compliance. There is no way out. Coming to the second amendment regarding CSR only, I already mentioned the relaxation. Relaxation is being removed. So see, a CSR committee should be there if there is an unspent CSR balance. And second, the relaxation in Rule 3, subclause 2, that is being removed. So company must follow the CSR. Once in CSR, they have to follow the CSR. Coming to the aspect of impact assessment, certain type of companies, the expenditure, they have the CSR outlay is much higher. In that particular case, what is required is that they should go for an impact assessment. And when they go for impact assessment, what it says that there is an expenditure, the amount they can spend for the impact assessment, because it cannot be done by them alone. They have to hire third parties to do the impact assessment. So earlier the limit, the cap was 5%. Now it is being brought down to 2%. And third is web-based return on deposits. We know that DPT3 is the form which you use for filing return on deposits. So return on deposits till 2019, till 2018, that is applicable only to 2018. It's applicable only to those companies which are complying in section 73. In 2019, what we have seen is that they made a drastic change to this provision, reporting provision regarding deposits. What they made the provision is that if a company is accepting amounts which falls under Rule 21C of deposit rules, so by default, any amount collected by a company is a deposit. But when you look at the Rule 21C of deposit rules, it says that if the amount falls in this particular PGN hall, this particular category, then it is not a deposit. Such transaction also needs to be reported. So this return on deposit is for Rule 210 transactions not considered as a deposit, as well as for transactions which fall under deposit under 73. So both together we have to file return on deposit. Now it is being made a web-based form. And physical verification of registered office by ROC. When this notification came, Rule 25B, the first question came is like, is it like that a GST department is verifying in some cases the registered office? ROC is going to verify the registered office? No. This is not applicable to all cases. Only those cases where ROC is going for strike off, because they should have a modus operandi. It's not that ROC just come, verify and complete and strike off. No, it should not be under vengeance. They should follow the rules as stated by the Kerala High Court in recent judgments, that any government department, a government authority, they should follow the practice as per what is laid on the rules. So if ROC is not doing this, physical verification not as per the rules, then this can be challenged. So it happens, that may happen that one particular situation, one particular company, they intend to strike off. They have done physical verification according to their wish. If the rule is not being complied with, then definitely the promoter or the director can challenge before the court of law. So the modus operandi regarding risk verification or registered office by ROC, more of an operational thing for registrar of company office, not for the professional. Of course, we have a provision if that procedure is not properly followed, provision to challenge. Coming to the next point, additional compliance and backup of books, accounts, and maintain electronic forms. Now we have seen a few months back, we have seen a cloud service provider, accounting service provider. They sent a message to all their clients stating that from 1st Jan 2023, they will not be in India. So you may move on to other service providers, and they made the subscription free for several months. Now it is being deferred to 1st April 2023, so that you can start your bookkeeping in a new cloud service provider. So one thing we can see is that government is very strict that if you are using the service of a cloud service provider, they should maintain backup in India only, not in US or some other country. Backup should be in India. So some rules are being made, changes are being made to make this provision stricter. And also, please note that backup, please note the backup. We go and ask the client, have you maintained the backup? Law itself makes, when you look at the deposit, sorry, when you look at the accounts rules, companies accounts rules, rule 3, Rule 3.5, it says that there shall be a proper system for storage, retrieval, display or printout of electronic records of audit committee as the audit committee, if any, or the board may deem appropriate, and such records shall not be disposed of or rendered unusable unless permitted by law. It may happen that we complete the audit of a company, they provide books accounts, and after several years we ask the same, within the statutory limit, the books is not available, it is being damaged or destroyed. Electronic also, they will mention the same stand. No, they cannot take this particular stand because the whole law is very clear. What law says, the backup books accounts and other books and papers made in electronic mode, including at a place outside India, if any, shall be kept in servers physically located in India on a periodic basis, and they should maintain proper backup. So these provisions are made more stricter. So coming to the turnover and capital criteria for determining small companies, as SICASA chairman Sadeshan sir has rightly mentioned that from 15 September, the limit is enhanced for small company 2 crore to 4 crore and 20 crore to 40 crore. So these are some highlights we'll see in detail, though we have discussed regarding the CSR company. Even if a company does not meet the criteria of CSR spending, but the company is having an unspent amount in CSR account, it shall constitute a CSR committee and comply with the provisions. So first thing is that look at the annual report, previous year reports. Suppose we are going to audit a company, and currently they're saying that for the last 3 years, we are not falling under CSR net. So accordingly, we are not constituted a CSR committee. But look at the previous year's accounts or annual report. If there are some unspent amount, definitely they should have a CSR committee. This needs to be complied with. Like, for me, if you are having the client having huge turnover, a huge profit, start this work by December itself. Don't wait for the end of the financial year or after the financial year. You know the reason. Obvious reason is that if it is an ongoing project, because it can be an ongoing project or other projects. Ongoing means it is more than 1 year. It takes a year to complete. So ongoing project, they have a time. They have within 30 days from the end of the financial year, unspent, if any amount is remaining unspent, then 30 days from the end of financial year, they can transfer to unspent account. For other projects, not ongoing projects, then what they have to do, there is no other option. Within 6 months from the end of the financial year, they have to transfer the unspent amount to the funds specified in the Schedule 7. This kind of Schedule 7 contains several categories. It contains what all activities you can see. The activities contains the funds it contains. It mainly contains contribution to Swachh Bharat Kosh, Clean Ganga Fund, rejuvenation of River Ganga, contribution to Prime Minister National Relief Fund, etc. So these are the funds which they are envisaged. So we have to contribute. So to sum up here, once a company falls, then CSR compliance, CSR provision will continue to apply for them continuously. They must comply with the same. Let me see some questions and try to answer question and answer. Sir, company has filed Form 82 for removal of auditors. Approval is pending before RD office. What to do? I think we have to follow up with RD office. That's all. It may take time. Can 83 for resignation auditor be filed with a delay? What is the late fee if the delay is more than 90 days? 83, it's not 100 per day. 100 per day will apply only to annual forms, AOC for an MCA. Earlier, they will not permit beyond time period. What they will do is that, okay, if you're filing beyond time period, then they will ensure penal provisions, shock of notice, etc. Now they are not that much stricter, but you can file the late fee, maximum 13 times. And the question: a company has not filed AOC for an MG27 due to non-approval of ADT2. ADT2, what should be done to avoid a late fee while filing annual compliance form? So ADT2 is not being approved. So what to do? I think you have to take up the matter with ROC. That's only. There is no other way out. Is virtual office not allowed as per the rule? Rule doesn't contain a provision regarding virtual office. There should be a registered office. Provision is very clear. Section 12. Section 12, which makes it very clear. Let me read out for the benefit of all. A company shall within 30 days of incorporation and at all times thereafter have a registered office capable of receiving and acknowledging all communication and notice as to be addressed to it. The company shall furnish a register verification of its registered office in the period of 30 days of its incorporation in such manner as may be prescribed. So nothing is mentioned in the rules regarding virtual office. People are having virtual office in some particular cases. At least you should ensure that you have an office to collect the documents. That's what the primary intention. A company crossed 5 crore net profit in current year. Should provision of CSR made this year, next year? If this year 5 year cross, next year onwards, you have to comply with the CSR. There is no harm in complying CSR from current year onwards. So we'll come back. We try to answer 6 questions. A limit on CSR impact assessment expenditure. So limit on expense for undertaking CSR impact assessment is brought down from 5% to 2% of CSR expenditure for the financial year. So as I already mentioned, companies having some limit exposure more than 10 crore, they have to mandatorily conduct an impact assessment. And for impact assessment, they may have to hire external agencies or professionals. So they have to incur expenditure. So such expenditure, there was a cap was put earlier. It was 5% of the expenditure for the financial year, or 50 lakhs, whichever is lower. That is previous year. Now the provision is being changed. It is brought down from 5% to 2%. Now 2% of CSR expenditure for the current financial year, or 50 lakhs, whichever is higher. So maximum up to 50 lakhs you can go, maximum. You can spend. Web-based DP83, as already mentioned. In web-based DP83, initially we had problems. Maybe for the last 1 or 2 months, we had the problem that in web-based, earlier we used to mention only the closing figures. So what is the position as on 30th March 2022? In the web-based, they are seeking the information regarding the movement of the deposits. What is the opening balance? What are the transaction? Addition, deletion, closing balance. And 1 month back, we had a problem is that when we enter some figures, may addition, deletion, the closing balance will not be correctly reflected. We enter the figures. Opening balance is the, say, 2 rupees opening balance. Addition is say 5. Deletion is 3. 2 plus 5 is 7. 7 minus 3 is 4. So now 4 is not coming. Only 5 is coming. So that is being resolved right now. We can file the DPT3 forms. DPT3 is a normal fee only, not 100 per day. As we already discussed, physical verification of registered office by registrar of companies. So Rule 25B introduced on modus operandi, where physical verification of registered office of company by done by ROC. ROC do the same. It should done 2 witness, can take the police aid, go through the office, can verify the rent agreement. Or after verifying all this basis, he can come to a conclusion whether the company is in existence or not, then proceed for strike off. So please note that earlier days we know that we will help our clients to provide our office address as the registered office address. Excuse me. All right. Our office address as the registered office address. This practice must be definitely stopped, because if we don't know when ROC will come and inspect, if they have some intelligence information. In one of the we recently seen in the WhatsApp as well as in the MCA website itself, we have seen the ROC adjudication. In a company based in Bombay, they got an information from the chief registrar that this one particular company in Bombay is not having a registered office. They immediately referred the matter to the registrar of companies. He conducted an inspection and initiated steps for the penal action. So this is an eye opener for us. Any of our clients, the address is not proper. Maybe you're mentioning at X place, and they might have moved to Y place long back. So please advise them, please change your registered office address immediately. Accessibility of electronic records. What Rule 3.1? Rule 3.1 of companies accounts rules speak is that the books of accounts and other electronic books and papers maintained in electronic form shall remain accessible in India so as to usable for subsequent reference. So whatever data we made in electronic or cloud form should be accessible in India. Suppose the server is based in US. Okay, the service provider is in US or some other country, and you are logging and doing the same. If the main server of this data is located somewhere else, what you have to ensure that the data, here Rule 3.1 says that it should be accessible in India at all times. It's not that, okay, when ROC comes for inspection, they should not wait for getting access to the data. Or you cannot say that only months, certain days, up to 1 to 5th, 1st to 5th, data will be available. Rest of the days not available. It's not like that. Every time, at all times, data must be accessible for verification. Rule 3.5, daily backup. So it is a must. The backup of books, accounts, and other books and papers of company made in electronic mode, including at a place outside India, if any, shall kept in physical servers physically located in India on a daily basis. Backup has to be done. You cannot say that, okay, I have a service provider and he's doing the backup. No excuse for you. You have to ensure that backup is done by on a daily basis and shall be kept in server in India. So you cannot put a blame on the service provider. So it is your primary responsibility to ensure the same. And when the company's primary responsibility, onus comes also to the auditor. So we also have to ensure the same. The maintenance of books, accounts in electronic form. The service provider is located outside India. The name and address of the person in control of books, accounts, and other books and papers in India has to be provided. Hope you remember a few years back, this Facebook, Twitter, all these social media institutions, they don't have a presence in India. In the sense that they are digitally present, but they don't have a compliance officer. The government made it very clear. You have to appoint a compliance officer, otherwise we will take a penal action. So subsequently they appointed the compliance officer in line with the same. If the service provider of this maintenance of accounts electronic form is located outside India, so I'm a company based in Cochin, Kerala, and I'm using the service provider, so it provides service, and this service provider's address is in the US. He's not having any place of business in India. And what is required is that I am supposed to mention in the AOC 4 that the name and address of person in control of books, accounts, and other papers in India. Because the rule, I would like to mention the accounts rule once again. In companies accounts rules Rule 3, heading is manner of books of accounts to be kept in electronic mode. Subclause 6, it mentioned that the company shall intimate to register on an annual basis at the time of filing of financial statements the name of service provider, internet protocol address of service provider, location of service provider, where the books of accounts and other books and papers are maintained on cloud, such address as provided by service provider. And this particular provision will be introduced the next year because the amendment came only in 5th August. Coming to the small company amendment. When we look at the past, we can see that till 30th March 2021, the small company, the paid up capital criteria is 50 lakhs. This is above 50 lakhs, it will not be a small company. And again, the turnover is 2 crore. And from 1st April 2021, it is being enhanced from 50 lakhs to 2 crore, turnover from 2 crore to 20 crore. And with effect from 15 September, paid up capital doesn't exceed 4 crore and the turnover 40 crore. So these are the criteria. So as already mentioned, the software will capture this capital, this wave fast, this thing's fast. So that's why we cannot, because when you select the SIN number of the company, the system itself direct, you have to file Form 7A, not Form 7. So there is no other option out because system only permitting you to file the same. Even if ROC takes an action subsequently stating that you are not a small company and you file the form, we can clearly mention that system permitted only this particular aspect. Coming to some of the adjudications done by ROC. As already mentioned, we have seen in some of the WhatsApp group that ROC has taken action. SIN number is not being mentioned like this. So I tried to incorporate 3 such adjudications. In this case, this is an adjudication made by Registrar of Company Gujarat, Dadar and Nagar Haveli, DJ Shah Investment Finance Private Limited. What is the issue? This company filed the annual forms, AOC 4, annual accounts and MGT 7. We can take the AOC 4. In the annual accounts they have filed, they failed to attach note to accounts on tangible assets. This particular note to accounts on tangible assets under fixed assets. This is not being attached. What happened? Once ROC identified the same, their observation of this, non-filing of adequate or correct documents on the MCA portal would result in denial of information to public about the company. So their conclusion was that, so you are not filing proper information. Thereby, the stakeholders' judgment is put on hold. His decision making is not proper. So they levied a penalty under section 137(3). Further, company was directed to file Form AOC 4 afresh. Then look at section 137(3). What 137 says. Section 137 deals with the filing of accounts, right? Copy of finance statement to file a registrar of company. So 137(3) says that if a company fails to file the copy of finance statements under subsection or 1 or subsection 2 before the expiry of time period, company shall be liable to a penalty. Here, we cannot say it may not be intentional one, right? One particular note they fail to attach, but we cannot say here. We may say that to err is humane and forgive is divine. When law is concerned, the principle is ignorance of juris non excusa. That's what regulators consider. They're not ready to give an excuse saying that, okay, you failed to attach on one particular sheet, but rest are being complete. No. I don't know why the reason they are very eager to levy penalty. Penalty should be levied whenever there is an intention must be proved. So we don't know the intention of the same, but the regulator has taken a very strict action. So very careful on the same. When you do for a filing, attachment, scanning attachment, very clear, you are attaching the documents properly. We cannot take an excuse that I have delegated the same to one of my articles. So he or she is doing the same. Because ultimately we are responsible. Now coming to another case regarding non-mentioning of a SIN number and registered office address on letterhead. This is an adjudication made by Registrar of Company Gujarat, Dadar and Nagar Haveli in Tangent Tech Infosoft Private Limited. So the failure to mention SIN number, corporate identification number, and a registered office address on letterhead. Please note that this should be there. So when a company is formed, immediately tell the client, your letterhead should contain what all information: SIN number, website is the website address, email ID, address, All this has to be mentioned. GST number is required, has to be attached. And otherwise, there is a violation. So they have noted this violation. And penalty is levied under section 12, subsection 8. 12, subsection 3, which we have read previously. I would like to read one for the benefit of all. 12.3 says that every company shall paint or affix its name and address of its registered office. Keep the same painted or affixed on the outside every office or place in which its business is carried on, in a conspicuous position, in legible letters, and if the characters employed thereof are not those of language of one of the languages generally used in that locality, also in characters of the language or of those languages. So if it is a vernacular language, has to be mentioned, and English is fine. And have its name engraved in legible characters. Get its name, address, and registered office and corporate identification number with telephone number, fax number, email, website address, all printed on all its business letters, bill heads, letter papers, and notice. So this is the requirement is very clear. Law is very clear. You have to print the same. So if you miss the same, they will consider as an ignorance of juris non excusa. So smaller company, we know that lesser penalty that will attract. And this is another adjudication by ROC of NCL to National Capital, Delhi and Haryana in own CHITS Private Limited, as already mentioned, failure to maintain registered office. So registrar of CHIT noticed that a CHIT company is not maintaining its registered office. Though in paper address is there, physically they are not present. ROC inspected, they have to take action. There is violation of section 12, subsection 1. So please note that nowadays ROC's the approach, not nowadays. I think they had a plan from 2015 onwards to go for this verification inspection. They're facing challenge regarding the manpower, but they are being much pushed. We see the notification 1 or 2 years back, they are hiring professionals. They need professionals because they have to initiate the process of verification and inspections. So we be careful in the sense that please advise your client properly. If the address is not there, please change it, no harm. It's a matter of how much cost we have, 2,000 rupees. But penalty comes, it is not 2,000, it is much higher. And not a penalty cost. You have to, one has to go and represent. Penalty is we don't know again, they will, of course, they have to levy penalty as per the rules only, but you can avoid the situation if the address is proper. Coming to annual filing, let me take one more question. Listen. It is by Chirumamila Hari Krishna. While filing the ICAI by director, a message popped up stating the particular SRN has been already filed. What's the remedy, sir? Sir, if it is already filed, then there is no need to submit once again. That's it. But if system is wrongly showing the same, then you have to take up with the MCA. Contact the call center and proceed. If it is already been done, suppose this particular client, your client of yours, having a another company, and if another chartered accountant or a professional has done the same, there is no need to file it once. Second, another question is by should private limited Srinivas Bhaskaran. Should private limited companies file DPT3? Yes, there is no exception, sir. All type of companies have to file DPT3. I think some of the members have raised the hand. Can they, if the Zoom master can permit them to ask the question? I think well and good. Aditya Chitti raised hand.
They can unmute themselves.
So you can unmute and ask question. Aditya Chitti, sir, you can unmute and ask question. Otherwise, we will proceed. Or we'll ask towards the answer. Shall I proceed, sir? I'm ready. I am ready to answer.
He has unmuted himself, but you're not able to hear him. So you can post in the chat box if at all you are making.
Sir, Aditya Chitti, sir, please post your question in chat box. You are not audible, so we cannot answer. You can hear your question and answer it properly. So there is a question came. If no deposits or loans are there for a private company, is it mandated to file DPT3? No. Answer is very clear. If there are no deposits, there is no requirement to file DPT3. 1 minute. No, there are no deposits, there is no requirement to file DPT3. Hope I answered the question. If no deposits, anonymous and the person is DPT3 required to file even if there are no deposits? No. Only if there is deposit, we need to file. If a private company took a loan from directors, then we need to file DPT3. Yes, sir. Yes, we need to file DPT3. It's very clear because Rule 2.1c. Go to Rule 2.1c, default rule, which says that these are certain transactions, which mainly deposit taken, share application money collected, but we allot within time period. If you are not allotting within time period, it will become deposit. If a private company, it's by Nasi Munisa Begum, ma'am. If a private company took a loan from directors, then we need to file DPT3. Yes, we need to file DPT3. For DPT3 is only maximum 13 times. Those draconian 100 per day is not applicable. Though LLPs, what you can see is that they have introduced small LLPs and the fees has been reduced. MCA must definitely consider that they have categorized companies as small companies. Why they are not giving the benefit of this 100 per day reduction to small companies? LLPs they are considered. Definitely they should consider this particular aspect. In future, we can ask our RC members to make a representation to government that small companies be given a lesser fine. Lesser fine provision is already there, but this can be considered. Shall we? All right. Yes, sir. I will just conclude. One last question will conclude and we'll proceed the presentation. One of the members asked, sir, can we have the Q&A at the end? No problem, sir. Last question I will attend. If cash credit have favorable credit balance on the balance sheet, then DPT3 needs to be filed. Is a loan. If a transaction falls under the category, if it is a loan, the nature is being changed by its account balance. If it not fall under the category of a loan, not required. Only if there is a loan, we have to disclose. We'll continue the presentation. Coming to annual filing. So what are the major changes in annual filing in this year? We know that there's additional reporting requirements in auditor's report. We know that the fund transfer, because government is after tracing this black money, money from unauthorized sources. So this we need to mention in our auditor's report, whether any fund transfer, utilization for some other person's purpose, beneficiary purpose, this reporting is required. The major amendments in Schedule 3, we know that ratios is being introduced, rounding off is being introduced. Please ensure you're complying with the same. There is no excuse. Rounding off is not an optional thing, it is a mandatory thing. So please ensure that our accounts are being uniform. The accounts prepared by chartered accounts are uniform. It's not that some prepare in a round off manner, some others no. This should be definitely complied with. Ratios that we have to comply and follow. And this year we know that they have introduced the V3 portal. MCA V2 portal is for the annual filing. And V3 is for the deposits, charges, etc. This V3 portal is being used. And what are the challenges in annual filing? Rounding off mandatory in financial statements from 1/4/2021. Also, ratios mandatory. However, there's a small correction in my slide. I mentioned here is not amended. Amended, not amended. This MCA form is not amended to that effect, because what happens, you have to round off and prepare the balance sheet, right? Balance sheet, profit loss account, the finance statements, entire set. But coming to filling the AOC form, the annual forms, you have to give the absolute figures, full figures. So there is a challenge in the sense that, okay, our own internal control is, okay, if suppose the student prepared the balance sheet is not going to fill up the form, there is some challenge, but we know that how we round off, but this has to be properly filled up. And one of the member told me there is a problem with it, because what he felt is that we need to mention only round off figures in the AOC form. No, you have to provide the absolute figures. So one had a problem. Okay, just by information I got, that is that they have provide the round of figures in the AOC form. What they can do right now is that they can file GNL1 requesting with an affidavit requesting ROC to reject this particular form and file the AOC form afresh. That has to be done. So the key challenge this year is that rounding off is there as Schedule 3 perspective, right? Balance sheet perspective, rounding off is done, but MCA has not implemented. In that front, we can say software is not fast. Software is slow, right? Coming to authentication of documents. Hope those who have done filing under the Erstwhile Companies Act 1950s know that we used to, what we do normally does, suppose the balance sheet is not ready, it's not being signed. We put SD, like balance sheet to be signed by minimum 2 directors. So before the, just above the name, SD will put, chart account notes SD will put, and below, down below, right-hand side, or sender you mentioned, SD, certified true copy, and digital signature, the name of person who is signing, his name, DIN number will mention. I repeat, if the balance sheet is not ready under previous regime, not under Companies Act 2013, please note, it is not under Companies Act 2013. Under all regime, if balance sheet is not ready, if the system, the MCA FAQ, if you go and search MCA FAQ permits a certified true copy, you can file. SD, you can file, but not under the new regime. New regime, what it says? What the rule is very clear. Rule 8 of the Companies Registration Office and Fees Rules. It says that the scanned image of documents shall be of original signed documents. Please stop here. Scanned image of documents shall be of original signed documents, which is relevant to e-forms or forms, and the scanned document image shall not be left blank without bearing the actual signature of authorized person. It doesn't mention digital signature, it mentioned actual signature. My suggestion is that law might have amended say that digital signature can be permitted. In certain case, they are permitting digital signature. But there is a danger when you use digital signature in the certified true copy form. I repeat, suppose you have a balance sheet, signing is not completed. What are the reasons? I don't know. Some other reasons are not complete. And anyhow, you have to file the form because save the client from additional 100 per day. So what do you put? Okay, you just put SD or you affix the digital signature just above the names. Chart accounts, digital, not chart accounts, director's digital signature is affixed, and you are trying to file it. What happens? There is a risk, is that when you affix digital signature, it shows the time and date. That means if it is not signed on 2nd September, the due date of signing, or on relevant date approved by the board, it is showing it is signed on this particular date. So there is a challenge here. Obviously, MCA should have amended because the ICAI Act is the digital signature signing should be permitted, but I don't know why they're not permitting. But we should be beware of the same because by this reason, by this specific reason, the MCA can pull out and mention that you have attached this particular form which is not properly signed. You just put SD, that is not fine. So whatever signing document, it should be scanned. Proper signed document should be scanned and uploaded. You cannot take an excuse saying that I put as SD, person is not available. No. Law doesn't permit the same. So authentication should be scanned copy of the signed documents. Coming to impact of delay in annual filing, what will happen? What is the maximum impact, right? If a person, we tell a person when you ride a bike in this particular road, in this particular area, there is a danger because the officer is very strict. Not that the traffic signal is there. Beside the same, officers are very strict. They will catch hold of you. And coming to the couple, there are some directors will ask the question, sir, what is the maximum impact if I am not filing on time? Okay, let me file later on. So we can say that these are the provisions. There is a denial of private company exemption. Hope all remember we have the Companies Amendment in first amendment in 2015, in 2017 second amendment, then 2020, like so. In there is a notification on 5th June 2015. Subsequently, it came another notification on 13th June 2017. In this second notification, what they clearly mentioned that in the first notification, there are certain exemptions or relaxations provided to private company. Example is internal financial control reporting. There's been relaxed, and so many private deposits, etc. There's been relaxed. But in the second notification, that is on 13th June 2017, they made it very clear that if the company has not filed the returns on time, exemption will not be available. Is not filed on time, exemption will not be available. What happens in a plain reading? We are not going for a prospective rethink. We are retrospective rethink. We are thinking only for a prospective. Suppose this period, this time, I am taking private company exemption. I am not filing on time. then next year I cannot claim the exemption. So there is it will affect the certain companies badly because they are just operating, though it is a private limited company, they will be operating like a proprietary concern. So this should be seen very carefully. Ensure that filing is done on time. If the company has not done filing on time, when you prepare the auditor's report, there is not a qualification. You have to mention ISA reporting should be the. Otherwise, ROC can initiate action against you, stating that you have not given a proper certification, proper auditor's report. So once the company is not filing the either AOC for annual accounts or annual return MGD7 on time, ISA reporting must be applicable thereafter. I am considering only prospectively, not retrospectively. Coming to the framework. Normally in our office, we all advise the students that whatever you does is based on some act, right? Statutory backing is again the statute will come and say which statute, which section. So we know the Companies Act is governing the annual filing, and the 11th section to go to section 92 on annual return, 96 on annual general meeting, 134 on the finance statements, 137 on the copy of finance statements filed with Register of Companies. We look at the present scenario. That means MCA AOC4 is not permitting round off. We have to provide absolute figures. In one way of looking at this, we can say that this is not a correct requirement. They're not not amending AOC4 is not satisfying the requirement of section 137. What happens in when you file AOC4? Whatever you attach is a round of 1, and whatever you mention is not rounded off 1. In future, ROC issue a notice stating that you have mentioned wrong figures. How you respond? An obvious answer is that they have not amended the form because the rounding off is being mandatory under the Companies Act. So this might be a reason, because this we should have MCA should have considered this particular fact alone. That is, the financial statements which they attach is rounded off and the AO form is not being amended. They should have permitted the software people. They can make the change. Not very. That's what really I'm not a software person to comment upon, but they should have taken some time and permitted excellent filing. Maybe they can go up to November. But this is a very crucial thing which is not being considered by MCA or government. Come to the linked or connected section, financial year. As we all know, a company which is incorporated after 1st January, they have to close their financial year is next March. So suppose a company formed on 1st January 2021, their financial year ends on not on 30th March 2021. It will end on next year, 30th March 2022. As far as an LLP is concerned, their cutoff is 30th September. So any LLP formed after 30th September, they have a time to close the accounts till next year, March, not next year. So a LLP formed after 30th September 2021, they can close the accounts by 30th March 2023, not 2022. They have an option is there. So coming to companies, it is after 1st Jan next year, March, not current March. Net worth is being properly defined under the Companies Act. Disqualification of director, this we must watch. We cannot take an excuse saying that, okay, I signed a balance sheet. While filing, I came to notice that the directors are disqualified. All my action will be void ab initio. So disqualification is the starting point prior to we start the audit. Before commencing audit, check whether this particular director is disqualified or not by their declaration alone, because this is an information which is available in public domain. We can go to MCA website and check this DIN status. As well as we can say, DIN status alone is not a criteria. Which all companies this particular person is a director, and come to a conclusion whether that particular company has filed. If not filed, then there is a question of disqualification. Disqualification law, when you go as per the law, what it says that whenever there is a disqualification, director has to intimate the company. Step number 1. Step number 2, company has to intimate ROC. And also it's mentioning in the law is that when the whatever the situation warranting disqualification has been changed, director, then company can intimate ROC regarding the disqualification is being changed. But the same is not properly incorporated in the law. We have seen in 2018, government has gone for a drive and freezed directors. Stating that these are directors of disqualified company. Subsequently, they brought this concept called courts. code scheme was introduced. Again, another drive has been done. Subsequently, so many companies have been striked off, gone to NCLT, some gone to NCLT, some gone to High Court, etc. So disqualification, this is a very serious matter. We have to ensure that this has to be reviewed on a timely manner. Because if there is a compliance checklist for the chartered accountants, the first item should fall as far as the company is concerned, whether the director is disqualified or not. Coming to the board meeting, we know that small companies on the relaxations of the small companies, they should have one board meeting in each half of the year, calendar year. Other companies, minimum 4 board meetings should be there. So this criteria has to be met, because whatever information we feed in the forms, I normally used to tell my students for doing the annual filing, when you do the annual filing, you have to change your mindset. You are not an auditor. As an auditor, you consider that everything is right and you proceed. When you do an annual filing for a company, your mindset should be from the perspective of management. Because whether the board meetings are being properly conducted, whether compliance is proper, all these aspects you should consider when you proceed with the filing. Coming to the framework, other rule, we have seen the sections, related sections, and coming to the 11 rules, the Companies Management and Administration Rules 2014 and Accounts Rules. When the Companies Act 2013 was introduced, a lot of experts normally tell that when you want to understand a provision of Companies Act, firstly you have to refer the act, then you go for the rules, then you go for the this notifications and circulars. So we cannot read one particular section or provision standalone. It has to be read along with the allied rules. Coming to annual return, section 92(1), every company shall prepare a return in prescribed form containing particulars as they stood on the close of financial year. So it is not AGM to AGM. It is only at the end of financial year. What the position has on 30th March of the 11th year. Within 60 days from the date on which annual general meeting is held, or where no annual general meeting is held in any year, within 60 days from the date on which annual general meeting should have been held, together with statements specifying reasons for not holding annual general meeting. So section says that we cannot say that I have not conducted an annual general meeting, therefore I am not filing annual return. That is not an excuse. Law is very clear. If you have not conducted an annual general meeting, you have to file the annual return, MCT 7, and you have to specify the reason. What is the exact reason for not holding the annual general meeting? Coming to the annual account, section 137, copy of finance statements to file register of companies. Look at the old scenario before the e-filing. 3 sets has to be filed with the register of companies. After the e-filing, everything is being eased. At the ease of our office, we can do the filing. Copy of annual accounts, finance statements, ensure signed, scanned copy. Sometimes we help the clients in the sense that, okay, they cannot come, they cannot travel. So we do it voluntarily, not signing. I'm not mentioning signing. I'm not encouraging such practice. We will help the client, okay, we'll put SD and file. But over a period of time, what happens is that some of the directors, they have some management dispute. They'll arise the problem. If there is a management dispute, what stand they will take? One person will take a stand that, okay, the auditor is aligning with opposite party. So if the balance sheet are not properly signed and you have ROC filed the form, then there will be a huge problem. So please ensure that, please avoid any such practice. Once you complete the audit, ensure that accounts are being properly signed. Only the signed documents are filed with ROC. Please ensure it. If you have any doubt, suppose they have engaged a company secretary to upload the same, there is no harm in chartered account. You can do a public inspection, maximum 50 rupees, right? Do a public inspection, verify whether the same document is filed or not. But that is not a requirement of section 137. 137 says that the copy of finance statement should be filed. If there is a consolidated, the holding company is the subsidiary company, consolidated accounts has to be filed. The finance statement should be adopted at the annual general meeting within 30 days from the annual general meeting. If the AG is not held, then also we have to file the AOC 4. 11 forms are Form AOC 4. Those on XBRL, AOC for XBRL, for consolidated financial statements, AOC for CFS is the. MGT 7 is for no other than small company, and for small company, MGT 7A is the form. Coming to one information which I thought I should discuss with you. In the annual accounts which you file in form AOC for, there is a question here. But the company is maintaining books, accounts, and other relevant books and papers in electronic form, which we have discussed in the beginning extensively regarding Rule 3 of Company Accounts Rules. Whether the company is maintaining books, accounts in electronic form. That is, suppose you are maintaining in Tally. Tally, it can be desktop form or a cloud form. You have to mention the answer is yes. Don't give the answer no. You have to give the answer yes. Yes, I'm maintaining in electronic form. Tally or any QB is going to change. Soho, yes, we have to mention Soho or any other accounting software use. And what second question they ask is complete postal address of place of maintenance of computer storing accounting data. Made it very clear. So you are using maintaining accounts in electronic form and where and which computer server this is being stored. Right? If it is being stored as per the agreement, your service provider is storing the same, then provide his address. If it is being stored by yourself personally, you are downloading the hot data and downloading and storing, you provide your address. So this information is very crucial. Normally what happens, we will permit the children, okay, you file it, provide information. No, this part chart account has to definitely verify. Particular service provider referring. So you have a cloud service provider, you have mentioned the service provider's address, IP address, location. Per books are maintained on cloud, provide the answer, then provide the address of service provider. Coming to connected forms. So annual filing, normal perception is limited to AOC 4 and MGT 7 or 7A as the case may be. But there are several connected forms. This has to be done simultaneously. So suppose in the AGM, in the first annual general meeting of the company, an auditor is being appointed. Then what the company has to do? Company has to do the ADT on filing. Appoint the auditor has to be enumerated register of companies. And second is deposits or deemed deposits. So as I already, some of the members asked the question whether a loan taken from company has to be enumerated. Yes, it has to be enumerated. Rule 21C, if time permits, let me take you to Rule 21C. Company's deposit rules. Yes, company's acceptance of deposit rules. What Rule 21C says? Rule 2 is on definitions of company acceptance of deposit rules. And Rule 21C says deposit includes any receipt of money by way of deposit of loan or in any other form by a company, but does not include. As I already mentioned, by default, any amount collected by a company is a deposit. And 21C gives a breather, states that if it is in this particular pigeon hole, this is not a deposit. Okay. Amount received from central government, the state government, foreign governments, amount received as loan or facility from banking company, amount received as loan from public financial institution, amount received against issued commercial paper, amount received by a company from any other company, amount received from a person at the time of receipt was a director. So please note, any amount received from a person at the time of receipt of amount, such person was a director or a relative of director of a private company, amount raised by issue of bonds and so on. So the list is very lengthy, but this covers transactions which are not considered as a deposit. Also, deemed deposit is there. Suppose you have taken share application money and not allotted within 60 days. And if you are not allotting within 60 days, 75 days, you have to refund. And if you are not refunding it, what happens? Law says that it is a deemed deposit. You have to make a disclosure and reporting. No excuse. Again, advance from customer. It has to be refunded within 1 year. If not refunded, it is a deemed deposit. Coming to the DR3 KYC, every year you have to file the KYC for the last, so 21-22 financial year, you have to do the filing after 30th March 2022. Okay, so KYC filing has to be done. So I have a small question. If KYC filing is not being done, can the company do the annual filing? Example, say a company is having only 2 directors, right? A company is having 2 directors and both of them has not filed the KYC. But the company can do the annual filing. Second scenario, one director has done the annual filing, other director has not done the annual KYC filing. Sorry, KYC filing. So first scenario, the company is having 2 directors, both of them have not done the KYC filing. Second scenario, company is having 2 directors, only one filed the KYC, other not filed KYC. Can you do the annual filing? Answer is very clear. At least one person should do the KYC. KYC filing, non-filing of KYC is not a reason for disqualification. It is an information gathering by the ROC only. But I'm not saying you should not do, must do. Do a practice, otherwise you have to pay a penalty of 5,000. Filing fee is a normal fee for, please note, this is for annual forms, AOC 4 and MGT 7, right? Maximum is late fees 13 times. So normal fee is up to 30 days or 60 days as the case may be, it is normal fee. Beyond 30 days or 60 days, it will be 100 per day. That's why I mentioned, if a company already in existence, this is the second year of a company formed in the year 2021. 21-22 is the second year. And till date, they have not filed the AOC 4. Then suppose the AGM date, example sake, is 30th September. Then till date, suppose you are going to file today, late fee for AOC 4 is 15 into 100, 1,500 plus your normal fee. And filing scenarios, look at the filing scenarios. We have this scenarios of the finance statements not adopted at AGM. Can you take a stand that, okay, the finance statements are not adopted at AGM, therefore I am not filing? No, law makes it very clear, you have to file. If it is adopted as you are going to file, revision of accounts pursuant to reopening under section 130, either initiated by regulator or by the management itself. There also you have to file the accounts. In the Satyam case we have seen is that Satyam 2008 December, the director came to the declaration, some fraudulent issues. And they went for the revision accounts, and they have to file all the previous year's accounts. Once the accounts are being restated, again they have to file afresh. And even if AGM not held, it's not a reason for saying that, okay, I'm not filing annual forms. Even if AGM is not held, you are supposed to file. AGM extended by ROC or others. So ROC has the power to extend for 3 months. You can apply to ROC for extension. That should be done well before, not at the end of 30th September, first week of September, or before first week of August. Extension in scope of small companies, definition we have seen. And MGT 7 only for small companies. A lot of relaxations are there. If you ask me a small checklist on annual filing, how it should look like, this tried my best. I'm not saying this is a complete checklist. Some of the points I tried to add. Updating or filing of KYC directors. This first thing you should start. So KYC has to be completed. So normally 30th September is the due date for KYC filing. This should be started by 1st April. You have to identify your clients, tell them, send a mail. They can do voluntarily, no issue. Otherwise you have to plan for it. Then directors are not disqualified, very bonding. After signing balance sheet, you cannot take a view that, okay, I forgot the director misled me or he cheated me. You cannot make such statement. We should be aware of the law. The directors are not disqualified. Third, AGM or non-conduct of AGM. Already mentioned, AGM is conducted or not. In the present journal, with me, I take the journal. And the present journal of ICAI, well, there is a disciplinary case. I would like to just read out. Journal of October 2022. So here, there is one disciplinary matter. The crux is that a chartered account certified a form 32 under the Companies Act 1956. There is a form for intimating change in directors. He just intimated based on the minutes he obtained. He got a minutes. So in the minutes, sorry, it's not the current. It is not October, subsequent only, November it's only, not the other journal. So the crux is like that, a chartered account certified form DI12, form 32. Form 32 is for, currently we have the DI12 list, that is the change in director. And what happened is that he certified based on the minutes only. And subsequently it came out that no such meeting was held. So institute held the member guilty because member has not ensured that meeting has been held. But this is very, when you look at this particular case, because normally on what base we normally file, we go, the director will tell us, okay, the director is being changed. So we will send them a resolution, prepare and send a resolution they have to sign and give. Normally the directors must be in consensus. If there is a management dispute, this is a very important aspect we have to consider. We cannot say that directors will be at unison always. This can happen at later stage. So we have to take abundant precaution and ensure that a meeting was properly conducted. That's what institute is saying in this disciplinary case. That is, abundant caution has to be taken. If you require minutes, obtain minutes. Obtain that the person resigning, see his resignation letter in proper. If you want him, talk to him directly. So this has to be ensured. But compliance, this makes the compliance more stricter, right? More time will be required. Data board meeting with attendance. In annual return form MGT7, you have to mention the board meeting dates. And this has to be checked in the sense that one of the date must be last year accounts approval. Second, other date should be any of the form you have filed during the previous year. What is the authentication date you have provided? This has to be cross-checked. Again, that's why I mentioned when you file the annual forms, AOC4 and MGT7, you're filing from the perspective, management perspective, because whether compliance are being properly met, it's being matching. Halting a subsidiary company details, if any, we have to mention. Disclosure of maintenance records in electronic form, discussed. Cost records, applicable to CSR and disclosure of CSR policy, very important thing. CSR policy, we have seen some of the changes. Even recently also, CSR, their disclosure has been changed. So this policy has to be attached. Disclosure of remuneration of key managerial personnel as well as directors is required. So it's not in as per the accounting standard 18, and the notes to account will disclose the key managerial person, their remuneration, etc. This has to be replicated in which particular form? In MGT7. Annual return. In AOC4, we will mention what are the late party transaction as far as P&L is concerned, as well as balance sheet is concerned. In MGT7, the key managerial person and director's remuneration has to be properly disclosed. Also, we have to mention the penalty or punishment imposed on company or directors. Details of compounding application if any filed. Duly signed list of directors and shareholders. Here, there is no harm in affixing the digital signature, but go by the rules. So I'm saying, okay, no harm in using digital signature. Go by the rules. Rule says that if you scan and attach something, it should be original signed copy. And whenever there is transfer or transmission of shares, go for obtain a confirmation from the management that you file. Mention the same. Scan and legible attachment is a must. As per the MCA clarification that is issued on 14th December 2021, permission to conduct annual general meeting in 2022 for the financial year ending 30th March 2022 or before through video conferencing or audio visual means is permitted. No extension for annual filing. We are clear. No extension permitting. But normally people say that, okay, we conducted meeting in video conferencing, but they should follow the rules. Rule make it very clear. Meeting of directors. Rules very clear. So proper recording should be there. Link should be the protocol you have to follow. So that should be complied with. A meeting which is not properly conducted is bad in law. It can be challenged at any point of time. We know that in certain cases, disciplinary action cases, their question is that if the appointment is not proper, if the meeting is not proper and the appointment is not proper, then there is a problem. So we have to take extra caution ensuring the same. Suppose that I already mentioned, normally in Kerala scenario, we have a lot of NRIs. Other states, I'm not very clear about the same, but Kerala, I know NRIs are the one person in India, one person outside India, and they get the balance sheet signed. Please take precaution in your state P. If the person is not present, if required, use your skepticism. Because if you use your skepticism right point of time, no one will harm you in future. Even if NFRA cannot touch you. So you must employ a skepticism at right point of time. There is a small case study. Due to absence of shareholders, the company is facing difficulty in convening annual general meeting. Is there a way out? Since others cannot speak, I have to mention what is the way out. The company is stating a reason they cannot conduct annual general meeting because shareholders are not available. A simple answer we can say in this current scenario, why don't you conduct meeting online? right? They can give a public notice, do a meeting online, that process can be complied with. Or they need some more time, they can seek an extension of the ROC. They cannot, because of management dispute, they cannot, directors or shareholders cannot claim that there is a management dispute going on. Therefore, we are not conducting the annual general meeting. No, that is not a valid reason. Impact of change in small companies definition. We've seen the earlier it is 1/4/2021, now it's from 15 September 2022. Turnover immediately preceding financial year, capital as on date of file. That's the point. We have this all you know, MCT 7 is for small companies. There's no need of certification by professional. Now, this particular aspect is everywhere in the form, but it's written small, like agreements, right? When you see the agreements, there are so many aspects they have mentioned the agreements. Either you have to go for taking a loan, right? Bajaj Finance normally calls chartered accounts frequently, right? They tell us, okay, you're being sanctioned by 50 lakhs or some loan, please avail the same. Automated call is jokes apart. Coming to MCA form certification, this is the wording clearly mentioned. The said records have been properly prepared, signed by the record officer of the company, and maintained as per the 11 provisions of Companies Act 2013 and were found to be in order. So what you're certifying, it's not this form you're certifying. You're certifying that whatever records based on which this is being prepared is kept properly. Is it minutes? Understanding, a wider definition. And these records on which this AOC4 or MCA is prepared, based on which, say, minutes or say, this has been properly maintained and is kept in order. All the required attachments have been completely and legibly attached to this particular form. So normally we take an excuse that, okay, books accounts have been provided at the time of audit. Subsequently, they have taken back. It's not available. We don't know. Okay, to some extent, it will help us because a chartered account need not keep a copy of the books accounts, but main agreements, what are the trial balance, etc. We have to maintain. But please be aware, if there is a management dispute, use your skepticism and ensure that wherever required, you can keep a copy. Coming to the certification of AOC4, it is understood that I shall be liable for action under 448 fraud for wrong certification if found at any stage. I declare that I have been duly engaged for the purpose of certification. There should be an engagement letter. The intention is very clear. Law is clear. You have been engaged for this particular purpose. It is hereby certified that I have gone through the provisions of the Act and rules thereunder for the subject matter of this form and matters incidental thereto, and I have verified the above particulars from the original or certified records maintained by the company, which is subject matter of this form, and found them to be true, correct, and complete. It's not true and fair. It is true and correct and complete, and no information material has been suppressed. Not a sample basis, sample check. For the penal provision, if the company fails to file the annual returns before the expiry set period, such company and officer is in default shall be liable to a penalty of 10,000 rupees and continuing failure for the penalty of 100 rupees. Maximum is 2 lakh. 137 annual accounts, 10,000 rupees, and in case of continuing failure, 100 rupees per day. So fixed is 10,000. Okay, as far as company is concerned, so parties will be, the old economic offense court case under the Companies Act 1956. Company has not filed annual accounts for several years. What happens? Parties will be, one party is company, other party will be directors. If the company is having a managing director, parties will be two only, company and managing director. If company is not having managing director, company plus all the directors. Company is having 5 directors, 1 plus 5, 6. So we are discussing the penalty of company. Now, directors or key managerial person, they shall be liable to penalty of 10,000 rupees fixed plus continuing 100 per day. Maximum 50,000. So what are the consequences of non-filing of annual return and annual accounts? We have discussed earlier. Disqualification, vacation of office, strike off. ROC can initiate strike off. For 2 years, you are not filing. They can initiate strike off, not disqualification. Winding up under 271F. So let me attempt few question answer. Then I will come to the FAQ. It's Mr. Vice Member Shakti Vel. What does it mean by active non-compliant company? Active non-compliant company means if the company has not complied from INC 22A. Hope you remember that is in 2019 they introduced a form that with respect to registered office, what you have to do? Take a photograph inside and outside. You have to take a photograph of registered office. Just it should contain this hemisphere, etc. And you have to attach and file. And declaration is required. If you are not INC 22A, then particular form is not being filed. Then company will be considered as active, non-compliant. So it shows that this company is operating without a registered office. That's the impression regulators will get. The question by Aditya Chitti: if no loans or deposits are there for a private company, is it mandatory to file? No, if there are no loans or deposit, there is no requirement to file DPT3. If there is a transaction, only you have to file. If there is no transaction, no need to file. But the common mistake happens is that blind spots, I can say. So I will go. Normally we go by the only if there is a loan or deposit from director, we go by the same. No, it is loan from any other person also. Banking company, financial institution, all other criteria. Rule 2(1)(c) has to be looked into. Due to shortage of time, I cannot mention only few aspects. Suppose a share application money collected, not and allotted, and subsequently it's being allotted. No issue. Suppose 30th March you have collected and you are going to allot shares in the next month, April. That will come as a share application money pending allotment, provided there is sufficient authorized capital. So this has to be reported. So a list of transactions has to be looked into. Is DPT applicable for unsecured loan from directors? Yes, sir. There is no distinction whether secured or unsecured. If there is a loan from director, DPT3 has to be filed. Pavitra Krishna. Srinivasan Bhaskaran, should private limited companies file DPT3 even though all deposits are exempt? Yes. Rule 2(1)(c) is for exempting companies. Those transactions, exempting transactions. Transactions which are not considered as a deposit. Yes, DPT3 has to be filed. Even for XBRL filing, original signature is required. Please clarify. XBRL, I understand you scan and attach. My exposure is limited regarding XBRL. So you scan and attach, that's my understanding. Also, further, you have to fill up so many information. Shyam Kumar MR. Sir, if there is loss in one of the preceding previous year, average profit, how we compute? Average 1 year. It's not saying that every year you should have profit to compute. Then 1 year loss, subsequent year profit, again subsequent year loss, average it. What is your suggestion on Manjunathan? Suggestion on rounding of figures in Excel for preparing. Should you use divisor or 100 by 1 lakh or use round formula? You can go for the rounding up or scaling formula. They are mentioned on the round off only. Round up or round down, they are not mentioned. Nagarajan. All directors are disqualified due to non-filing of annual return in one case. What is the duty and position of auditor? If the directors are disqualified, please help. Okay, can advise of advice. No issue. Don't go for any kind of certification. Don't do any certification. The only answer is the house is on fire. That is the message it's giving. Directors are disqualified. Run away. Run for life, right? So don't do certification. Please beware. That's the first thing we have to do. Naveen Kumar K. From which date that 60 days to be considered for filing annual return? If AGM extended or extended from ROC is approved. 60 days is from the event. Event is the AGM date. AGM date. So normally, I am not blaming any professionals. I've seen a practice some people are doing. I'm not doing right now. The practice like they will have the AGM. They will be adjourned after a few days. Again, this practice will continue and go on. Please avoid such practice. Only if required, go for the practice. So it is 60 days from the event. If you use the AGM held 60 days from that particular date, you are not able to file. Adjourn the AGM again 60 days from that particular date. From which it is considered right. Received from directors and then he is not director in subsequent year. Whether exemption are applicable to or qualify in audit report. Mr. Naveen Kumar asked the question, received from directors. I understand it is a loan received from director and he is not director in subsequent years. Yes. The rule is very clear. Rule says that loan is taken from a person who is a director. At the time of taking loan, he is a director. Right. And subsequently, he is not director. No issue. Whether exemptions are applicable or qualify, and exemptions are applicable. So rule 2(1) is fine. You not go for a private company exemption. But if you, suppose this loan's terms are being, you are going to take additional loan, there is a problem. Right. So there is no question of exemption. Rule 2(1)(c) by default excludes this transaction from the purview of deposits. Nagarajan sir, hospital receives advance from patient. Should this be shown in DPT3? Advance from customer, sir. I will just read out the portion. For the rule 2.1c says, deposit rule. Rule 21cx. It's 10 Roman 12. Any amount received in the cost or for the purpose of business as an advance or supply of goods or provision of service accounted for in any manner whatsoever, provided that such advance is appropriate against supply of goods or provision of service in a period of 365 days. I mentioned 1 year, 365 days for the data acceptance advance. Where in case of an advance, it is subject matter of any legal proceedings before any court of law, said limit will be 365 days shall not apply. If there is litigation, that will not apply. The advance accounted in received in connection with under an agreement or arrangement provides such advance adjusted against terms of agreement, no issue. Security deposit. So only way out, either you have to mention is for a long-term project or a security deposit. Hospital, there is no way out. Advance from customer is an advance. Nagarajan, I think the answer question is not clear. Rao Sunil. Question is, if AGM date is extended by ROC, what is the due date in this case? Extended date. If you file an application to ROC and ROC gives time till 30th November, then that date. Hope you remember the last year. Last year, what was the scenario? MCA didn't extend the date. ROC is all over the country extended the AGM date because they have an inherent power to extend, either based on application or CEO motto. Based on the current country's situation, COVID scenario, they extended by till 30th November. So from that date, not from the due date, 30th September will not apply in that scenario. What are the date extended by ROC? If the additional director is ratified as director in the AGM, but DI12 is not filed, what would the impact? DI12 is not filed, it is only procedural lapse, only the late fee will attract. But that action taken in AGM, properly convened and conducted, it cannot be questioned. Again, conduct of a meeting, there's a big question. How a meeting should be conducted? We have to go to our friends, company secretaries. Their standards are being issued by the ICAI Institute, which makes it very clear, Secretarial Standard 1 and 2, which says that a meeting need to be conducted, a proper notice has to be issued. It has to be properly served. Okay, agenda has to be served. This has to be circulated. All this process has to be completed. Then only you can say the meeting is proper. That's why I mentioned in one of the disciplinary case, Institute came down and said that the member has not considered whether the appointment is proper. So if the meeting is not proper, then the question of appointment is proper will come. So the additional director. So if you explained that one director in India and other is outside India, Naveen Kumar, video conferencing for EGM is permitted till 30th March. No, for the year ended or before. But about board meeting, quorum will not be present. Will the video conference be board meeting? Yes, it applied to board meeting. There is no harm in conducting board meeting by video conferencing. Is UDIN mandatory for AICC for certification? Yes, UDIN is mandatory. Very clear. Because any kind of certification, if you're giving an opinion, UDIN is not required. For a certification, AOC for INC 2020A, that is for commencement of business, there is a certification by chartered account. INC 22, if there is a certification by chartered account, UDIN is required. Law is very clear. A customer and initial paid advance for special purpose machine for his new manufacturing unit, and because of pandemic, he discontinued business. Right, as customer is not contactable for last 2 years, the company is thinking of forfeiting advance, whether this amount is deemed as deposit. As strictly as per law, this can be considered as deposit. Again, if it is a long term, etc., this has to be factored. I'm not strictly interpreting law as it is. You go through provisions. There are some relaxation for security deposit, long term contract, etc. So because some require more time, so then this should be backed by an agreement, right? Please display the query. Gauri Venkatesh Rao. Manikandan, I am reading from the chat available to me. Hi, sir. Suppose if the net profit is rupees 1.5 crore loss in financial 1920, 1 crore in 6 crore, whether crore CSR applicable for financial year 22-23? Yes, the previous year, the current year, my criteria 5 crore is more. Next year onwards, I have to comply the CSR. Naveen Kumar, loan from directors. Adaballa Saira. If company got incorporated on 19th October 2020 and not filed any annual returns, then what about the data you didn't be generated by auditor certification? Please, you have to use on the present date. Earlier we had the back date provision. So don't take any risk for the client. There is no requirement. Go as per law only. You're going to certify right now 60 days back, maximum that is permitted by the unit. That only you have to comply with. According to law, don't help the client in that manner. Go as per the law. If there is an opening balance of loan from director and same repaid and no closing balance, if DP3 needs to be filed, it's being asked by Santosh Kumar KK. So that is as on 30th March 2022, there is no closing balance. Whether DP3 has to be filed, the present scenario, earlier I would like to say there is no balance, it need not be filed. But in the present scenario, the form they have changed in which they are tracking the movement. So I will well advise you have to file DP3. Opening balance, transaction, addition, deletion, closing is nil. It has to be filed. Advance from customer is a deposit. Advance from customer is not repaid within 1 year, will be a deposit, deemed deposit. By the normally, for what reason ROC extend AGM date? Health of director could be a reason. We have to mention 2 main reasons. Either non-availability of main reasons you stress. Or 2 or 3 reasons. Non-availability of directors can be, directors and shareholders can be mentioned. Accounts readiness don't go for the same because ROC will not like the same. Some ROC says that, okay, you have all this time, you have closed the account on 31st and you're coming to me after 5 months that my accounts are not being closed. So don't mention that as in one reason. Audit is no, accounts are not ready. But one of the out of several reasons, one reason it can be a reason. It not be a main reason. So mention the non-availability of directors. Genuineness is very important because you know that the reason, but genuine reason has to be properly mentioned. Then only it is the discretion of ROC whether to give or not. You cannot challenge it. Of course, you can go for a challenge if there is a big reason, but that again involves time and money. If we are unable to file annual return after 60 days of AGM due to problem at MCA website, what will happen and penalty levied? That is a very good question. You are unable to file after 60 days of AGM. So how will you prove that? You have to prove, right? Penalty should not be levied. So better start the process early. When you go for the strict law version, so you're not able to file some reason, but have you filed any complaint to ROC MCA portal that you're unable to file? You are attempted. So all this has to be factored in. Please explain consequence of non-conducting AGM within the due date. If you are not conducting AGM in due date, you have to go for a compounding. There is a non-compliance. Regarding extension of date by ROC voluntarily, as of the previous year, we are told to indicate that is extended by ROC and due date is the earlier due date. Please clarify. No, if ROC has extended voluntarily the due date, the due date, 2 dates are the due date, and then we have to go for the due date only because they are extended till 30th. That the 30th November, that can be considered. Hope I answered. Due date stand extended in that point of time. Regarding CSR, is it 2% on average profit of last 3 years or 50 lakhs? Sir, what I mentioned is, Manigandan sir, what I mentioned is that regarding the CSR impact assessment, certain type of companies, if their outlay on CSR is beyond certain limits, they should mandatorily go for a CSR impact assessment. Okay, this impact assessment they cannot normally do. They will hire external agencies and they have to incur some expenditure. And there is a cap on this particular expenditure. Earlier it was 5% of the expenditure, CSR expenditure, or 50 lakhs which were lower. And the amendment came is that it is 2%. 2% of the CSR expenditure for the financial year or 50 lakhs whichever is higher. So 2% and the don't mix up 2% of not average net profit. What I mentioned is regarding impact assessment expenditure, cost on the maximum cap for the CSR impact assessment expenditure. Regarding CSR is a 2% average profit for the last 3 years or 50 lakhs. No, not that way. In case of AOC 4 is filed based on the provisional figures, should Schedule 3 is mandatory? AOC 2 or AOC 4? Sir, it's mentioned AOC 2. Schedule 3 is mandatory. Can we file the final financial statements again? Sir, Vaidyanathan sir has mentioned AOC 2. I'll correct it. AOC 4 is filed based on provisional figures. Accounts are not ready. Schedule 3 is mandatory. Schedule 3 is the format prescribed for companies, right? So definitely we have to go as per Schedule 3. We cannot give a T format or any other formats balance sheet. Correct. Okay, right. So I tried to answer the questions. Let me just complete. Sir, shall I take 5 more minutes with your permission?
Sure.
Right. Few FAQs are there because now when you do a CP meeting, institute asks, you have to provide FAQ first, right? I'm being asked to provide at least 10 FAQ. I shared 8 or 9 FAQ. So this, I think, who give the answer will get. There is no award, there is no prize. Appreciation will be there, right? Please answer in the chat box. So question number 1. Due date for filing annual accounts, AOC 4, and annual return, MGT 7 for a company incorporated on 1st March 2021. So what is the due date for a company for filing annual accounts, AOC 4, and annual return for a company incorporated on 1st March 2021? So first answer came D. Option D is being mentioned. 30th December 2022, right? That is by Adabala. Please excuse me if I am spelling wrongly. Sai Ram has given. Vaidyanathan sir has given the answer C. Karthikeyan has given the answer A. Right. The right answer is D. You have maximum time. Due date is 30th December, 9 months from the close of the financial year. There is no harm in conducting early AGM, but maximum due date will be 9 months from the close of the financial year. First year. So this question, a private limited company failed to file its annual accounts and annual return for the year 2021 on time. A private limited company failed to file on time. Failed to file here, I will clarify. That is it not filed? It has filed, but not filed on time. It filed with a late fee. Whether this needs any additional reporting in auditor's report for financial year 2021. Option A, no. Option B, not applicable. Option C, yes, qualification to be given for 21-22. Option D, yes, report on internal financial control to be enclosed for 21-22. So whoever give answers, the name will be announced. Right. Here it is an answer came. Karthikeyan A, Vaidyanathan D, Karthikeyan B, Sairam A, Nagarajan A. Purushottama sir has raised hand. Sir, you have a question? I think if organizers permit Purushottama sir to speak. Santosh Kumar KKD, Naveen A, Arjun A, Balasubramaniam A, Chindam Akil Azaz. Last question, 1st March. So first year is 2021 and AGM date is 37. No, first year is 21-22. Lohit A, I will just come to the answer. Here, answer is they are not filed on time. So what happens? The private company exemption will go, right? 2017 exemption will go. Then IFC reporting is mandatory. In auditor's report, you have the auditor's report. CARO is the CARO applicable plus IFC reporting. Coming to third question. A private limited company having 2 directors for whom DIR3 KYC was not filed at all. Whether annual filing can be done without KYC updation. Please answer. Option A, yes, you can file annual filing without KYC updation. Option B, not applicable. Option C, KYC at least 1 director to be updated. KYC all directors to be updated. So answers will be, we have Nisha D, Naveen Kumar C, Vaidyanathan C, Chindam Akil C, Sairam C, Purushottama, Santosh Kumar C, Said Karthikeyan C, Aditya Chitti C, Nagarajan C, Lohita C, Gomadi Vallaban 2C, Kalyan D, Nisha C, Maheshwaran C, Dinesh Reddy D, C. So the right answer is Right answer is at least one director. We discussed, right? Well, it is one director's KYC to be updated, not all directors. Again, I'm not saying that it should not go for the same, but should do practice. It should be better practice. KYC should be done for both, but at least one should be done. There is a question number 4. Alco Private Limited is having 2 directors. 2 directors, out of which one director is also a director of Balco Private Limited. And this Balco Private Limited, this company has not filed its annual return and annual accounts for the last 3 years, right? And as on 3 years, as on the person as on 30th March 2022. But the annual filing of audited accounts for 21-22 is possible for Alco Private Limited under the circumstances. Hope the question is very clear, right? There is a company called Alco, 2 directors, and 1 director is a director in another company called Balco. Balco has not filed annual accounts and annual return for the last 3 years. But the annual filing of audit accounts for 21-22 is possible. Answer A is audit is proper and filing can be done. B is filing can be done if the other director is not disqualified. Audit is not proper and filing cannot be done. D requires approval of ROC. D, we have the answers from C, Dinesh Reddy, Nagarajan B, Chintan B, Nisha B, Naveen Kumar D, Sambat Pandit A, Purushottama B, Srinivasan Bhaskaran D, Ayati Chitti B, C, Kalyan, Sairam D, Srinivasan Lohit, Srinivasan C. Right. Audit is not proper. One of the member asked the question, can I generate? No. Don't rush. Right. My as a suggestions are rightly mentioned, my mentor is John K. Joseph as an article. And the first advice is gave me is that don't rush. Even if the client is busy, don't rush. So here we should not rush. Whether the appointment is proper, because we will be held guilty. Because so many people are crying for the blood of a chartered accountant, because chartered accountant may be done it honestly without any bad intention. So ensure that there is no rush for the same. Don't help the client at this point of time. If the appointment is not proper, you should not audit, don't sign it on. So the answer is audit is not proper and filing cannot be done because there is a disqualification. If there is a disqualification, there is no board. How the board will come into picture? Otherwise, they should appoint some other person. And whether one person company has to conduct annual general meeting, answer is A, option A, yes. Option B, no. Option C, not required if turnover is less than 2 crore. Option D, required if turnover exceeds 2 crore. Srinivasan C, Sampat B, Akhil B, Lohit A, Purushottama B, Vaidnathan, Kaumadi, Nisha B. So what is the right answer? No, not required. We all know, right? So thank you all for the active. I just concluded the 5 FAQ only. Thank you all for the active participation and thank you very much. Hope I'm able to share some of the information. If you any mistake happened on my part, please excuse. I am also learning. Please feel free to if any more questions, I'm ready to answer. So if SIRC permit me to answer.
Sure, sir. And just one announcement is that from SIRC, they also take up the same questions that you take up now, right, sir? As assessment after completion of the session, next 2 days, as it is mandatory to take up for CPT.
All right. I think as there is an announcement, you'll be shared with an Excel. Am I right, sir?
No, not with Excel, sir. They can log into the digital learning portal. They know how to log in actually. The
Right,
same
right.
portal, they can see the feedback and also they can take up the assessment for their knowledge enrichment actually. In
So
next 3 days time, yeah.
After the session, you have 3 days time.
Yeah.
You have to just log into the digital learning portal, answer the questions, then only you'll get the CP credit. So please ensure that this is being properly done. Otherwise, you will not get the credit. So instead in ensuring that not only that you attend the meeting, you should properly update and give feedback, whatever good or bad, you give feedback. Again, I thank all the members present here for asking right questions. It's a great learning experience for me. I also thank SIRC for considering me and giving me the opportunity. I'm very happy that Sadishan sir is with me. Right, we hail from the same state. We we are gone for a tour together. The trip I cannot forget. Thank you, Suggestion Sir, being with me, and thank you, SIRC team, and thank you all the members of South India. I have one small request. It doesn't matter where your office is, whether you have office in Chennai or Mumbai. It only matters how we are contributing to the nation. So we have to ensure that we are contributing our best to the nation by knowledge updation. MCA website is well updated. Spent every day, minimum 5 minutes. Website, go through the website. There is nothing, there's no rocket science there. Information is readily available. So please go through the same, update yourself. We should not say that, no one should say that chartered accounts are not updated. We should say that we are updated than any other profession. And thank you, SIRC once again. Thank you, and back to Sadeshan.
Thank you, Sean. Very nicely you are presented the paper, and almost all questions very authentically you are given the answers for the questions. I hope that members around 280, 285 members are reached, and I hope that all the members are get enriched with the new MCA's filing and MCA updates. And I'm extremely happy that again with the full sync as usual, you are performing your all the session. And I hope that all the members will do the feedback and fill up the forms. And I have one more request to all the members. We are going to conduct our regional conference on December 9th and 10th at Hyderabad. So today is the last day for early bird option. So I request all the members to register, those who are not registered, and avail the early bird offer. Otherwise, you will be losing around 1,018 rupees. So please register and be part of our mega event of SIRC Regional Conference. Thank you once again, everyone. And I hope that again, Sean will again come to us with another session with a detailed presentation. And I am extremely happy with him sharing the stage with him. And I wish all the success to him. Thank you.
Thank you, sir. Thank you. Thank you all.
Thank you, sir.